The Dow and S&P climbing to records yesterday. And with a multi-trillion-dollar infrastructure bill looming, the bond market remains relatively quiet, relatively calm. Joining us to talk about what that might be signaling, Komal Sri-Kumar, President and Investment Strategist at Sri-Kumar Global Strategies. Sri, you predicted 1 3/4. We hit that. Next target was 2 even, and we're not there. We're at 1.7 a day. What's your time frame on that? And have you been surprised at the relatively small moves or slow pace that we've seen in the last 6 weeks or so?
Joe, my target is still 2%. It has not changed. And I'm not surprised at the way the bond market has moved, because I've repeatedly said on your program, it doesn't go up smoothly or go down also in the same pace, but it generally moves a little bit and then something happens and it pushes up substantially within a short period of time. My expectation is a lot of things are coming together. The Senate parliamentarian decided yesterday that a procedure known as reconciliation, which President Biden used to have the $1.9 trillion stimulus package passed, can be used more than once during the fiscal year. So that means the ruling party can use it again before the fiscal year ends September 30th. So that is going to have an impact. Then you have numbers in the trillions of dollars for infrastructure spending going up to $10 trillion from one elected U.S. representative, and they are all going to go into the market. So my expectation is, as it seems more and more likely, and we see the inflation numbers pick up during the days to come, they are going to get reflected in the bond market, and don't be surprised if it then suddenly moves up 10 or 15 basis points in a single day.
Right, because at this point, in previous cycles where inflationary expectations have gone up, you would see a bigger spread, and you're not seeing it yet. So there's some dislocation there. You think it gets that we will see it be resolved with the 10-year yields going up to 2%?
That is correct. I think what you have seen so far, Joe, is a substantial move. After all, remember, we were at 94 basis points at the beginning of the year, and we are at 170 today. That is a big move to take place in just over 3 months. So it doesn't keep going up sharply or every day and in reaction to every bit of message. The bond market, as I have seen, collects about 4 or 5 different data points, and then it moves up in a hurry. And that is what I think is still the case. And I haven't changed my expectation at all on that. And the propelling factor is clearly higher inflationary expectations. They are going to come. The Federal Reserve is not going to give up on its expansion. The fiscal policy is going to become more and more expansionary. So there is nothing to hold the bond market back.
So, Sri, a lot of your previous prognostications about the bond market being so strong and interest rates staying so low is because you thought that global growth estimates were overstated and we weren't going to hit those. I think you've shifted a little, but it caused you to always look with sort of a questioning eye at valuations in the stock market, and that's not your thing. But the stock market, have you just thrown up your hands because you've thought it's been a naked emperor for a period of years, and it's done nothing but go up? What do you do now? Just say, I give up, and I wouldn't touch it, but you just can't explain it, can you, in your view?
Well, yeah, the stock market is being supported once again by unrelenting expansion on the economic policy, Joe. The question is, I'm not going to be the person predicting, and nobody can, to say when that inevitable correction is going to come, because your previous speaker on the program talked about the S&P 500 being at 24.5 times future earnings. That is, again, historically high level. Can it be sustained over 3 months, 6 months, 1 year? But every time that happens, the Fed comes in and provides even more stimulus. So people will have to decide for themselves that whether they are going to buy it at 30 times earnings, 50 times earnings, and at some point, like the Dutch tulip mania of 1637, the whole euphoria gives rise to a bust. And I simply cannot tell you when that will happen.
Shepard Smith here. Thanks for watching CNBC on YouTube.